Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Thursday, January 28th, 2016. I hope you guys are managing these markets good. It's been a little bit of a crazy day today, but hopefully this free video report will give you some ideas as far as what we're thinking about. Obviously, we can't give you all the information because we have our paying members that would not be happy with that. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these opportunities through Woody Dorsey's sentiment database, as well as his technical turn dates is when the reversal should hit, and then from there we combine them with regular technical analysis. Now, the turn dates and everything, we're not saying that they're going to be 100% correct. They're probably well into the 90% correct, which is unbelievable for somebody predicting when these turns are going to take place weeks in advance. But they're not going to be 100% correct. But what you're going to know, even if something doesn't turn on an exact date, you're able to look at what how investors are feeling through sentiment and just the regular technical divergences. And because a turn date doesn't take place on an exact date, it just kind of means things are extending, but it doesn't mean that if we're moving up that the upside is safe anymore. It just means that, okay, this turn date didn't work. When is the next one? And you don't want to be following the media and all the other gurus that just tell you to jump onto the bandwagon, because overall the underlying landscape is not safe. And that's what we try to really relay to you as a member is, is it safe to be buying? Is it safe to be shorting? Or should you just keep a neutral stand on the market? So we do this through the technical time dates that Woody gives, and usually, they could be weeks in advance, they could be a couple days in advance, but if they're in advance, you're going to know on these dates when to expect some kind of turn. We then match it up with investor sentiment. Or are we getting extreme bullish readings? Are we getting extreme bearish readings? And that has to be interpreted, and that's what he does, because he's been the pioneer of sentiment for basically forever. He's one of the first ones that really started following it, and you can search the web. There's really not a whole lot of people that actually do sentiment, so he's one of the few in the world that does it. And then we again match it up with price to figure out where these turns can take place. So I left you with expecting some kind of bounce last week, and we got a fantastic bounce off of the lows, and anybody that was listening to pretty much the majority was expecting a crash on Monday, and instead we got a massive rally on Friday, and from there we're over 100 points higher from those dates, and we didn't crash. Why? Because everybody was expecting it. Sentiment was at extremes. We knew we had a turn date that was coming, so we got the bounce. Is it safe to be buying? No, not at all. We actually have been saying that we are anticipating that this rally is going to rally into the January 26th to the 27th. And then from there, there's going to be setbacks due into, and this is the part I can't tell you because our members would not be happy that I'm giving this information, but we know when to expect a low. Now, the important thing is this, is that everybody's going to jump over, once the downside kicks in, which it may. Today we're getting a bounce. It seems like they're trying to catch shorts and longs on the wrong side the way this thing is bouncing around, but the overall trend should start down. And the thing is this, is that when it does, everybody's going to be jumping back onto the bear market, and we're heading down and everything's going to go like that. But what we're actually looking for is it's going to be probably the best buying opportunity that we've seen so far this year. And we knew that the upside that was going into the January 26th, 27th was just going to be a bounce, and it was not the buying one that you wanted. So that means that the bounce we're getting today, it's probably going to be a shorting opportunity, and you have to just kind of layer in, don't get aggressive, because we know that we've had sentiment that's been at extreme levels, and there's been some serious damage to the psychology of the market. But overall, we're expecting some weakness, but the bigger picture, or say the bigger bounce, is probably going to be to the upside, and that is going to be on this date when we're predicting when the the better buying zone is coming in. So the sentiment, the way that we work this is, when it's at the euphoria, you don't want to be jumping on the long side. When it's at capitulation, or everybody's depressed, you don't want to be getting aggressive on the short side. So think of it as a technical indicator that goes off a price, but yet these use say traders' emotions. So let's take a look at where we were. Remember what I was telling you? We had everybody that was bearish on this market. Everyone was calling for a crash down there, and from there we got a nice bounce. Look what's happening. We're starting to get some bullish sentiment readings, and we're nowhere near this top right here. So that's a warning sign. Does it mean it has to turn today? No, but just know that the long side is not really as safe as some of these traders are thinking. So if I'm just going to give you an overall market environment, we're in a bear market. What he's been saying that really since August, and now everybody's starting to pick up on it. Intermediate term, we're really neutral, because there's a buying low that is going to be approaching, and it's going to be a decent rally that's going to hit. And short term, we were expecting bounces, and we got it. And now it may have topped on the 27th. Maybe they try higher today and tomorrow. It doesn't matter. It's not changing the overall market environment, which is we should see weakness coming into the next turn date. So let's take a look at our regular charts. And here, remember what I was telling you, where I was showing you we had some high sentiment readings. We know we had the turn date that was coming, and if we just take a look at our charts here, we have some serious bearish divergences that have built up when we made this higher high. So we knew not to buy into this, even though we had the Fed rally coming. Now, if they push higher, all we're going to do is start looking at the next pivot levels, and you short. You don't buy into this move right now, because things are not set up for it to make that move. And that's what I mean, where the S&P's up 10. It was up a lot higher before, and they pulled back. But the thing is is that it's not safe. So if you're just looking for the long side, wait for the drop. Then you start buying, because you should know that there's going to be a better buying opportunity. But the question is when. That's where you need to know this information. And like I said, I'm not really going to push a big sales pitch on this. You should know whether you need this information or not. I mean, Woody is considered one of the best market timers in the world. It's sentiment information that you're not going to be able to get anywhere else. It's going to really let you know how everybody is feeling about the market, and the regular technical analysis. So right now, if we bounce, I'm keeping an eye on yesterday's highs and then the gap right here. And if it pushes higher than that, then I just look for the next pivot zone. What the Bears want to do, they want to push it through the previous lows. If they do that, then we start looking for a test of these lows here. But like I said, if they extend higher, these bearish divergences are just going to continue. So the long side is not safe, no matter how they close the market today. It's not going to change the landscape, even though we were looking for a top to hit yesterday. It doesn't mean that things are safe if they head higher. So that's about all I have for for tonight. And like I said, if you want to know how to trade this market with confidence, and having one of the best market timers in the world with a secret type of indicator, which is sentiment, because nobody really does that and is able to let you know what it means, then join in with this. It's been fun, and like I said, it's a relaxing way to trade this market. So I'm keeping the specials, and we get messages like, why do you keep specials? Because we know you've heard this sales pitch before. We know there's a lot of people that say they're the best, so we want to give you an opportunity to test it out. And it's half price at $74.99 for the first month. Then it moves to our normal $149.99 a month. And just use the coupon code 30day7499. If you do that, just you're automatically going to get moved on. Put your email address in. I'm giving you a free membership to MarketsPath. I do nightly video reports, as well as morning notes and then send out my, what trades I'm making right now. I've been trading the SDS because I believe the market's going lower. So if you're interested, click on that. We're not taking, we're limited to only a certain amount of subscribers. So if you want to take advantage of it, click on the coupon, and from there until next week, have a great day.